Thank you so much. That introduction was a lot. It's very hard to come and to follow a great man of God, our pastor. It's for me to just follow him, and I know I'm filling up a very big shoe. And for me to go ahead, I just want to appreciate our pastor again for giving us an understanding of what fatherhood is and being a father and a priest. And let's give our pastor one more round of applause. Thank you so much. And just like you said, my name is Akin. And today we'll be talking about stock trading. Who's excited about talking about money? High five someone right next to you, please. So we're about to talk about money today. Show me the money. All right. So basically, this section is going to be in two parts. I decided to break it into two parts. I know we're going to talk about stock trading, but I want us to have the first part for us to take an understanding of how, whatever we need to do in life. There are some basic things we need to put in place. There are some basic steps we need to put in place. And then if those things are in place, whatever we need to do in life, it might be business, it might be raising a family, it might be even in the church as well. It's applicable and it's very useful for us to adapt some of these strategies or some of this information I'm going to provide for you. So the first thing we need to talk about, there is an interesting man out there says, what are you thinking? So today, I want us to talk about setting up goals before we go into numbers and stock trading. What are your goals in life? What is it that you want to do? Whatever business ideas, whatever social contribution in the community, whatever contribution in the church, or anything in life, you need to set goals. So, before we talk about stock trading, because it's also more like you having a goal, what you want to get out of stock trading. So what are your goals is very important. And once you set your goals, it's very easy for you to move towards success. People with goals succeed. And because they know where they're going, they succeed. They already set it up. It's as simple as that. You become what you think about every day. And that's the power of your mind. The more you think about it becomes part of you. It becomes, anybody can wake you up in the middle of the night because it has been part of you. It's become a DNA in you, and that's who you become eventually. If you're thinking about becoming a pastor, if you're thinking about it every day, you set your goals to read the Bible daily. You go to Bible studies, you go to prayer meetings, you're thinking about it, you set the goals to move towards it. You eventually become a man of God, you eventually become a pastor. That applies to life too. If you have a business idea that you've been thinking about, and you're excited about it, you set your goals, you go to seminars, you invest in yourself, you eventually become that. That applies to stock trading as well. So if you set your goals to get an understanding of what stock trading is all about, you pay all the dues, all the sacrifice for going to classes, for seminars, you eventually become a seasoned stock trader. And the next thing on the agenda is courage and taking risk. Stock trading is all about taking risk. Anything in life, whatever business you need to do in life is all about having a courage and taking risk as well. And we're going to talk about starting your own business. Stock trading is a business of its own. So take a look at stock trading as any other business that you're trying to set up or you're trying to start. Because you make money from it, you pay taxes on it as well. So it's a business. And you can do it from the comfort of your home, from your class, if you're a student. As long as you're connected on the computer or the phone, you can do that. And then stock trading is more like you making money work for you. A lot of people in life tend to reverse the situation by working for money. But here, if you're very smart in the things you invest your money into, you can make your money work for you, and you have a good return on your investment. And just like I said earlier on, what are your goals? Think about 3 important goals of your life: personal goal, career goal, and social contribution. This key here, if you adopt this in whatever you need to do in life, and also bring it to stock trading, you will achieve success. So I just wanted to highlight this before we go in. And the first part of this lecture is more about getting us all excited and a little bit of motivation before we go into the numbers. So, and just to support the idea of the power of the mind, our daddy mentioned Hebrews 11 earlier on, and as he was saying that, I wrote it down. Now faith is the substance of things hoped for, the evidence of things not seen. It's just the same thing with stock trading. You're taking a risk. It's a big risk because you're talking about investing your money in a company, but you're believing that this risk will bring forth a reward for you. So faith is also what I exercise when I'm trading as well. I make some bold decisions. When I tell some of my partners, they are scared, but I have faith that what I'm investing into will eventually give me returns. So let's move ahead. So these are the money mistakes a lot of people make. There are a lot of mistakes people make, including myself, that I've made in the past as well. People still do that. There's so many, but I just picked up a few to highlight. No financial path, procrastination. A lot of us do that, including myself. I want to do something today. I know it's in my heart to do it, but I keep procrastinating. I'll do it tomorrow. And this one right here, procrastination, we started, thanks to our mommy in the house and our pastor in the house, we started what we call a monthly stock trading and investment session here in the church. It's a free monthly program. People come in, we have an interactive session. I show them some of the things in the stock market to buy, and just to teach people what it is about stock trading. And our mommy in the house championed that, encouraged me to start that. The first class, we had a lot of people came. And here in the first class, I challenged a lot of people to open up a brokerage account, an online account. But not everybody has been able to do that. And I think our first class was in April. And I will show you some of the big gains for those that invested in some of the stocks that I called out in April. And the price for buying one stock in April, and the price of the stock as of this week, this Wednesday, I'm going to show you the return on investment of some of the things I called out. Lazy money, I call it lazy money. People just have money saved up somewhere. The money is not yielding anything for you. Today, you put your money in a savings account. You already have, returns on it. It stays in your savings account or an IRA account. It's just sitting there. You have maybe 0.002% return on it. There's nothing. It's lazy. One income stream. Stop trading. I mean, you need to quit a job. You can be a student. You can do this. Have lack of knowledge. That's another mistake people make. Invest in yourself. Take bad advice. Wasting time, no great knowledge. These are, money mistakes we make. And I know we all have papers and we're eating. Please, if you can't write right now, use your phone to take some of the pictures and just use this as a guide as you move along in the next step in getting into stock trading. All right. I'm a partner here at the Great Shirt Consulting. Here, our goals for you is to help you create wealth. Save a minimum of $10,000 and continue to grow your portfolio. You can do it yourself. You understand? And if you need more services, we can provide you, consulting services as well. Show you how to make money in the stock market, and then we help you put yourself on a financial track. And this is an interesting quote here. Henry Ford is the founder of Ford Motor Company. He once said, anyone who stops learning is old, whether at 20 or 80. Anyone who keeps learning stays young. The greatest thing in life is to keep your mind young. I want you to take a look at that and let that sink into you. You know, anyone who keeps learning stays young, no matter what it is. You're not too old to learn, and you're not too young to teach. That's a great quote I take from someone. You know, it could be a 16-year-old person or 18-year-old person. They can teach you something if you know, subject yourself to learning. And this is. Does anybody know what this is? Thank you, sir. Anybody else? You know that face? Kentucky Fried Chicken. That is Colonel Sanders. Does anybody know anything about him? Something unique about him? Yes, sir. Okay. He was a failure, sir. Okay. He encountered a lot of failures as he continued to grow in life, a lot of setbacks, but at that's it, KFC. So at 65, at age 65, that was when he had a big break with Kentucky Fried Chicken, and the franchise continued to grow. Can you imagine at age 65? I can't go into details, but just Google it, check out his life history. There will be a lesson for you to learn from his life history. So at age 65, he didn't give up to settle on retirement or social security check. He, you know, encouraged himself and began a journey that made him, a millionaire. Even that he's dead, he could have made billions, but he wasn't really after money. He was after making a brand, KFC Chicken. All right, that's an older person at age 65. So compare that to someone else as well. I'm just trying to use this illustration to make you understand that you're not too young to do anything, you're not too old to achieve success as well. Mark Zuckerberg, born in 1984. 20 years later, at 2004, he created Facebook. Now, he is the sixth richest person in the world, worth almost $45 billion. So look at that, he's a young person. Then there is another person. This is a little boy, I think he's about 18 now. Damon Williams from Chicago. And I want you all to understand that we have children at home. I'm a parent as well. I have a 5-year-old daughter and a 2-year-old son. Let's begin to change the mindset of our children. Teach them what it is about investing in things. This young boy got a lesson from his mom. Just like a 14-year-old boy. He wants his sneakers, he wants Air Jordan sneakers, he wants fashion that is in vogue, he wants a piece of it. But the mom had a finance advisor, and she told him someday, I'm going to buy you some of these sneakers that you want, but I'm also going to teach you a lesson on investing in some of the things you buy. So if I give you money to buy a sneaker, you must invest in Nike. So the mom gave him $5,000, and he started teaching himself on the internet. And he taught himself on so many financial terms, trading terms, what it means, all these strategies to invest. And every sneakers, every jersey that he buys, he invests in as well. With $5,000, he was able to grow $5,000 into $50,000. You can search him on YouTube. Now, I think he's worth more than 50 grand. But I'm just using that as an illustration that parents teach your children, show them that there is more to life than just buying sneakers or t-shirt. They can buy and be investors in the company as well. So let's go to reality check 1. 1 in 3 retirees earns less than $900 per month. I'm not putting this up there just to say, retirees make about $900 a month, but a lot of people in that category earns less. So how we live today, year spent, a lot of people, most of the people out there, 5 years, we all, 5 years as a child, 17 years in education, 45 years working and 5 years in retirement. That comes to about 70, I think 72. So But how we should live is what I put on the other side. 5 and 17 is very constant across. But we need to be very smart these days on how we create wealth for ourselves. We don't have to believe in the same old now to work decoration for so long, for 30 years, for 40 years. We need to cut that down and be able to enjoy our old age by making our money work for us. That's why I put it as, let's go down 45 years working for someone else to 25 years. And in retirement, your money is still working for you. Okay, this is self-directed retirement. And now we're going to talk about stocks, options, trading. This is the key thing we are talking about today. There are other self-directed, options out there for people. You can, put your retirement money in any of these things, and you can continue to grow it. So let's go into stocks. So learning the basic, what is stock trading? Stock trading is just you having investment in a company. A stock investor is an individual or company who puts money to use by purchase of equity securities, offering potential profitable returns or as interest income or appreciation in value, which is capital gains. So this is key. If you don't understand what stock trading, I can't really go into everything because of the time we have. Well, go home, check on the internet what stock trading is. It's basically, as an investor, you put in your money into a company, and as the company continues to grow, they make profit. You, as an investor as well, make something out of it. So what is the stock market? Primary market, secondary market. So the primary market is what we have in New York, the New York Stock Exchange. And the secondary market is what we do online, brokerage firms. So here, these are what I listed here. These are the basic markets that we have. New York Stock Exchange, we have the small cap stocks over 1,900, which is about 1,900 companies are selling their stocks on this one. We have the big board, over 2,800 stocks, like IBM, JP Morgan, and other companies are here. NASDAQ, a lot of technology companies are here on the NASDAQ. Mostly you identify them by 4 ticker symbols. That's Amazon, eBay, Netflix, Google, Apple. And so mostly technology companies trade on the NASDAQ. The S&P 500 index, that's top 500 companies in North America, the big companies. They are here. A lot of financial banks are here as well. And the OTCB, OTCC, penny stocks, that's highly volatile. We'll talk about that later on. But I don't want you to focus yourself. You can also research what OTC is, over the counter. These are small companies that are very volatile and can go under and less regulated. So the question is, how do I start stock trading? Where do I go to start? The 2 big C's I have here is get a computer, get connected, have internet. Those are the 2 key things you need to get. Or if you don't have a computer, other mobile devices, your phone, a tablet, as long as you connect. So after getting those 2, the trading platforms, these are the brokerage firms. We have Scottrade, we have E-Trade, TD Ameritrade, Fidelity. These are trading platforms. These are online platforms where you can buy stocks and sell stocks. There are more, but I decided to just pick 4, so many other ones. And they charge different fees for you using the platform to buy and sell stocks. So I put this here to make people understand that when you're trading or you're going into a stock trading, you need to have a strategy. And this piece here, a lot of people that are trading right now miss this part. Some people buy stocks without having a strategy. You need to know what you're investing or what you're doing. Am I adopting a long-term strategy, a short-term strategy, or am I a daily trader, which is totally different? Or I just want to play with penny stocks, which is highly volatile, high risks, high returns, very volatile. So here, I made a lot of mistakes while I was starting off trading on the side. I've started trading almost like 7, 8 years now. So the early years, I didn't have an opportunity to go to a class or something. I was just, learning on my own, researching, joining different boards, people that talk about stocks. I just joined. Sometimes I pay monthly, sometimes I do the free one. And I lost a lot of money in the penny stocks here because I wasn't well knowledgeable. But as I grow and I continue to learn my mistakes, I continue to be very careful in the risks I'm taking as well. And I need to know, okay, am I buying these stocks to hold for a long time? To be in it for 6 months, to be in it for a year, or to be in it for short to mid-term? Maybe within a month, I want to buy and sell. So you need to do that to know that even if my partner is buying the same stock, I'm buying the same stock, but my strategy is to hold for a year. My other partner might be putting a lot of money in the same stock, and he's only holding for a month, and he has his target to meet. Once I make $2,000, $3,000, I want to be out of the stock. As someone else, putting in maybe $5,000 in the stock, I want to hold for like a year. So your strategy might be different, but you're going into the same company. So this is key. So, reality check questions. So we go into the second reality check here. I show us the first reality check here. So now, the second reality questions here is on the $10,000 investment for a period of 6 months. By show of hand, anybody can just say whatever comes to your mind. On a $10,000 investment for a period of 6 months, what do you expect for your percentage growth rate? Or what is an ideal return on investment? If you have a $10,000 for 6 months, what do you expect to make back on it? If you decide to use your money anyhow, invest in anything, what do you expect? Anybody? Just give me a number. 50%? That's about $5,000, right? 100%. So what would you put $10,000 to have 100%? What? $10,000 for you to have 100%. What would you put it? Where would you put your money?
Stocks like Apple stocks.
Okay, penny stocks, Apple company. Okay. But let's be realistic. Let us be realistic. On a $10,000, what do you expect? If you're not even investing in stocks, let's say you want to put your $10,000 to something else, what do you expect to get in 6 months? $500. That's very realistic. Because even if you put $10,000 in a fixed deposit or in a CD, you won't even get $500 in 6 months these days. So we'll see what happens. That's why I put a second on a $10,000 savings. You put it in the bank for 6 months. What do you expect? Less than $500. All right, let's do a check in stocks that I called out in April, where the stocks are today. So reality check 2 here. As of April, Mommy is here. We have a couple of members here that came to the first class, and we had the first class here as well. Twitter, as of April, was trading at $13.98 to $14. The same class. I told everybody that it's good investing. Now, as of Wednesday this week, the stock went from $14 and was trading at $24. Wow. From April to October, Wednesday. So if you invested $10,000 in April and you sold in October, you would have made a profit. $10,000, your money would have grown to $17,000, $142, which means you made a profit of $7,142. April now on the $10,000. You don't have to have $10,000. I just chose a number, so it's easy for calculation. If you invested $1,000, it's the same thing. You would have made about $700 or something, which is still higher than what you get in the bank. So that's reality check. It's possible. You just need to understand that taking risk is very critical if you want to make something in life. Whatever it is, it might be starting up a business, you need to take a risk. Take your first step. You might fail the first time, but failing doesn't mean that's the end of it. Look at what mistakes you've made, learn from it, and continue to grow. That I've done over the years as well. I've lost money. I've looked back. What did I do? Okay, I didn't have an exit strategy. But today, when I'm going into a stock, I always have an exit strategy. If the stock is going down, and I'm going to explain that as well. One of our brothers is here. We both invested in the company. It went down, and I told him to relax. I put a lot of money in it. So relax, let's average down. And I explained what averaging down means. I think he's in a good position today, which I am as well. So the second one, reality check number 2, Chemours. Chemours is a spin-off company from DuPont. If everybody knows DuPont, it's a spin-off company that came out of DuPont about a few years ago, maybe 2 or 3 years ago now. Okay, so as of April, the stock was trading at 5 something, but I put $6 just for easy calculation. So if you invested $10,000, the stock now is trading at $16.32. So you can imagine if people took the risk, and I'll explain my position as well. So you need to understand your strategy. So $10,000 from April to October, which is about 6 months, would have given you. Would have given you a profit of $17,189, which means your stock went from $6 to $16.32. 10,000 would have grown to 27,189, which is a profit here. This is what you would have made in 6 months. So can anybody tell me which bank you put $10,000 will give you this profit? No way, you can't get it. So there is a lot of money to be made in the stock market. People, young students are doing it. They're in college, they're doing it on their phone. Sometimes, I still have a regular job. I work at Barclays Bank. So sometimes I'm in my office, my phone is right next to me. My iPad is right next to me because I can't do it on my company computer, laptop. So market opens every day, 9:30. I'm logged in. So I'm looking at the market because I have different accounts. I have different strategies that I use my account portfolio to trade. So I know what I'm doing. I have a short, those strategies that I have the ones for a long time. I don't check them every day. But the ones midterm to short time, I have to check them every day to know this is my exit strategy. I bought a stock for $13, a stock. I already have my exit strategy now. Once the stock gets to $17, sometimes I set it up. It's already set up for me to sell. So I have to look at it. $13, once it hits $17, sell. And it sells. So your exit strategy is very key. A lot of people miss that. So Chemours now has gone up. And can anybody from the first class remind me of any other stock that I called out? If you're in the class, please. Square. Thank you, my brother. Square. I don't want to go into too much details. Square, as of that April, was trading at $8. Now it's $12. About 11 something. But last month it hit $12, but as of this week it's about $11 and something. That's about 50% increase. So all these stocks here, I called it out in first class. I told people to buy Barclays, Bank of America, Chesapeake Energy Company. Wilshire is also an energy company. So everybody knows where. The credit reader and Faith. This is a technology a lot of people that are into health stuff put on their wrist that monitors your heart rate and something. That's the company that make Faith. So you can imagine all the stocks that I called out in April, just over 6 month period. This has gone up 71%, 270%, 30, 45, 130. So the minimum is 30%, which is a lot, depending on how much you invested in April. So, and regardless of whatever you put it in, it could be $1,000, it could be $10,000, it could be $20,000, depending on how much you put it's going to determine your returns. So it's key that you have your exit strategy. If I'm going to hold for a year, you know that, okay, this company that I'm investing in a year, I've already done my research. It's a good company, even though they're trading at this level now. Over six months to a year, it's going to go back up. So that's what I call reality check 2. And These are trading tools. These are the key things that I use to do my research every day, every other day. I do this when I'm working from home. When I'm working from home, I put on the TV in the morning around before 9:30. You know, I watch this. They talk about, you know, stock all day. That's what I do from, you know, before 9:30. So sometimes some things are happening as the day goes. You can easily find out while you're listening to them. These are all my trading tools that I use to do my research. And I just want to encourage us all that there's nothing you're doing in life. There is a price to pay for anything that you want to achieve. A doctor in the house, to become a doctor in life, you have to pay the price of long years in college, in school. You have to, you know, study hard. It's different from, it's hard because you're dealing with people's life, people's health. So it takes a longer time for them to, you know, get out of medical school and start practicing. The same thing with any other thing in life. You know, accounting, there's a price to pay. You need to understand numbers. So it's key for us to do research and invest in ourselves. I still go to seminars. I pay to go to the seminars. I have some of these things I pay to join their body. These IOP investors I pay monthly for it. They have the free platform, and you can also pay as well to get more information. So it's key. All right. I don't want to go over the time. I know there are so many things lined up for today. So these are the 10 great ways to learn stock trading as a new investor. We can take pictures. I can't go, you know, into details of everything, but these are key things that I want us to learn as well. That's 1st to 6th and 7 to 10. If you're taking pictures, let me go back. All right, 7 to 10. So these are the great things to learn when you want to become an investor. All right, so let's just go into, I know a lot of people will have questions. This is an open forum for us to ask questions, please. If you have questions, raise up your hand and they'll bring the mic to you.
It's a quick question. When you look in maybe you go to E-Trade or any of them, how much do you have to put in? What was the minimum that you can put in if I want to trade?
$500.
$500?
Yes.
Okay. What about for the penny stock? Is that the same thing?
It's the same thing. Once you can actually open the account and not put any money first. They will let you open the account. But for you to start trading, you need a minimum. So you open the account online now. You can fund it the next day or the day after. You just put $500. And for you to start trading penny stocks, as long as you put $500, you can start trading on penny stocks or regular big companies. So $500 minimum.
Last question.
All right.
For the company that you showed us, which of them are your long term and which of them are your short term or like VCN, VAC?
Okay. Very good question. The long-term stocks here. Sorry. A lot of my long-term stocks are here on this here. And I bought into Chemours when it was, that's why I said, I'll explain to you. When it was at $6, $7, I bought a couple, but I sold when it got to $11 because that was my exit strategy for me to make close to like 100%, which I'm out. If I waited, I'll be making more. You understand? So it's still a win-win for me because I didn't lose any money. My exit strategy was sell for me when it gets to $11. So these are my long-term here. Barclays is a good stock to buy now. It's trading at about $8 to $9 now. You can buy and hold. And Bank of America as well. It's a long-term investment. Chesapeake, good one. All these here are my long-term companies. And there is more. We have a monthly session here which is free. Please do come. And if you need more services or you need to have more questions here, I forgot to bring my card. So this is my number right here. This is my email. And just reach out, contact us. We can set up time if you have more questions and there is more for you to learn. Any other question, please?
Yes, please.
All right.
I wanted to know how similar is stock trading to forex trading, and also, do you handle hedge funds, like creating hedge fund accounts and managing?
No, okay, I'll start from the back. We don't handle hedge funds right now, but hopefully we'll grow to that as a company to be able to do that, but right now we don't. And your first question is the difference between stock trading and forex. Very similar. The fundamental difference is just that stock trade, forex is just you dealing with foreign currencies. You're dealing with currency, trading currencies. You buy dollar, you buy dollar to sell. When dollar is low, you buy. When it's low, you sell. When it's the same strategy. You buy a stock of a company when it's low, you sell when it's high. So forex is trading currencies. Stock trading is trading on equities of the company. So it's just the fundamental difference is currency and equities in the company. Any other question, please?
Praise the Lord. Yeah, I understand the fact that we need to study, we need to get ourselves acquainted to this thing. But my question is, do you, as a person, has a program or a way by which you can reach out to the men here that really want to do this? I mean, I'm not talking about standing there talking to people like that. I mean, that we can reach to us personally, like the kind of stock we need to buy, where we need to invest, what we need to invest on. Do you, by any chance, have that?
Very good question, sir. The thing is, apart from the monthly free session we have here, there are a few brothers in the house that do reach out to me. Some 2-3 times a day. Even when I'm busy, I'll tell them I'll call you back or I'll text you back. They reach out to me and ask questions, and I'll give them. One of my brothers is sitting on the table right there. Last few days, they asked me for a couple of companies. I sent about 5 companies and what they can buy, and I gave them the range to buy. So my number is open. Also, I created a WhatsApp page for stocks investment in the church. So if you want me to add you to that list, please put your name down or put your phone number, add you on WhatsApp. That is ongoing as well. Sometimes it's quiet on the board because maybe a lot of people on the board are new investors, so they really don't know what to ask. So sometimes I tell them, these are the things I told you to buy, please buy. Now it's going up. You can sell, or if you want to hold. So there is a program on WhatsApp for people to join. My number is up there. And also, if people might need more sessions, reach out to me. We can set up a time outside of the church or outside of the WhatsApp thing. We have an office in Wilmington. We can set up time. You come in, maybe it's an hour, sit down with you, and then we'll go from there.
Thank you.
All right, we have this.
Excuse me. The question I have is, I work for the city I've been there for 26 years, and we have a 401k that is in stock markets. And we have people within our union, within the company, that like oversee, and if you see something trade going or going big, they will advise you that maybe you need to move your money or my question is that you think that is a reliable way to support? I mean, I only have 4 more years left before retire, and so I think to have someone looking over the money instead of making so I just don't change the idea whatever they want. But I mean, I don't have the ability to do anything like you do, so I rely on them to handle my money.
Very, very good question, and I know people have asked me that similar question. So I will advise people in here that a 401k is a very good and very conservative way to continue to save for retirement or for your children's future, for retirement. It's very, very conservative. But if you look at what happened in 2008, where we had recession, a lot of 401k was affected, including mine. I was still with Bank of America then. If you're someone, a lot of us don't even look at a 401k. We don't know how the performance is happening in there, what's performance, what's yielding, what's happening. We just select it. Some people don't even select. We just give it to whatever company that is managing those 401k funds and retirement funds. And a lot of those funds are invested in what I call mutual funds and bonds and ETFs, So these are big companies like Fidelity and some other things. They manage this, portfolio. They make a lot of money. They do so many things behind the scene that we don't see happening in our 401k. All we see is the companies, put in an aggressive portfolio or a very, very conservative portfolio, and we see the growth going over year. It's good, but they make a lot of money. So do not take this opportunity of what I'm showing you here to make a very quick decision to go take your fund out of your 401k. But just for you to understand what happened in 2008 when the recession hit. So many 401k got hit with it and they dropped. But if you have the knowledge, and I think, I'm not saying this, but from my training and analysis I've been doing, we might still see a shake-up sometime this year. After the election, a lot of companies will fall. I see that happening. So what I can advise you to do, you've grown your portfolio for years and I'm sure you have a lot of money in it. Just don't take your money out, but keep what you're growing. If you see or you start hearing things in the news that companies or there is a possibility of a recession or there's something, you can change your funds and have cash. Call the company that manages your 401k. You can sell everything, leave your funds in cash. It's always good to have cash than have your money left in those mutual funds or bonds, because when the market crashes, you see the drop in all your investment as well. This is what I learned over time too. If I knew that in 2008, I would have changed a lot of my funds to cash and I would have made so much, because I would have handled it myself. Because when those companies dropped, they dropped drastically. I can tell you about 4 stocks off of my head that dropped. And some of us were invested, AIG, Bank of America, Ford. They dropped to as low as between $1 to $4. Check where they are today. They are way up there. So if I had cash in my 401k, I could have easily moved the money myself and put it in the stocks that I know will still grow back. So I would say don't take your 401k out, but try to learn, about if you want to handle your portfolio, try to learn first. There is a lot to be learned in stock trading. So once you keep learning and growing, there'll be more understanding of what to do at that point in time. So that's very key, sir. Is there one time for one question? All right.
Is it a good idea to borrow from your 401k?
Good and bad, sir. Because when you borrow from your 401k, there is a penalty to that if you haven't reached, bless you, if you haven't reached the age that you can take. But if you're borrowing out from it, depends on what you want to use the money for. If it's an urgent needs or medical stuff, that's your fund, you can take it out. But the good part that I've done before, of taking money out of 401k and reinvest on my own. I take a portion out and I reinvest it in stock market myself. And once it yields, I put the money back. And I'm able to have, it's just like me borrowing against my money to use to trade in the market. So it depends on what you want to use the funds for. If you just want to take it out to pay something very important, you can do that. But I advise to always find a way to put it back in there.
Thank you.
Praise God. Put your hands together for the Jesus. In fact, a lot has been said. The word is enough for the wise. And from now, I believe we're going to invest in our money wisely now. I just want us to relax a little bit before we go to the next session. If you need to use the bathroom, is right, my left-hand side corner. So stretch yourself out before we go to the next program of the next item on our program. That's going to be starting and financing a new business or credit building. So you can stretch yourself and just come back as soon as possible.
Yeah.
As the last speaker has rightly said, you can reach out to him by calling on his number. It's 302-887-0099. That's all what I have written down here. So I do not mean that we should go outside there, spend 10 minutes, but I just want you to stretch yourself, use the bathroom, and come back to your seat. We're going to start right away. So it's not going to be a prolonged recess. Hallelujah. So we want to do this as soon as possible, and I know we still have a lot of programs lined up for the day, maybe your personal program. So we want to honor the time that we have today. Are we getting blessed here at all? Let me see your hands up. Wave your hands if you are getting blessed. If you are enjoying the program, let me speak in the plain time. Right now, I'm going to call on the next person on the program in person of Dr. Kate Pettiford. That's the person who's going to anchor the next item on the agenda. That is Dr. Kate R. Pettiford, who is a seasoned leader in the financial services industry. He has 25 years of wide-ranging domestic and international professional experience in the financial services sector, and working for organizations such as Citibank, MBNA, Nations Bank, and now the Bank of America and Barclays Bank. He is currently the Vice President, Chief of Staff of JP Morgan Chase in Wilmington, Delaware. His primary focus is risk management, where he is leads and the management of the business, delegation and execution of projects, and oversight of day-to-day operations of the consumer and community bank. The risk of an organization approximately 400 people, over 180 billion in assets, an annual budget of 65 million. In addition to his position at JP Morgan Chase, Dr. Pettiford is also an adjunct professor of business at Wilmington University. He is also an active member of the Alpha Phi Alpha Fraternity Incorporation. Kate holds a Doctor of Business Administration and a Master's of Business Administration from Wilmington University. He obtained his Bachelor's of Science degree in Mathematics from Open State University, where he was also a McNair Scholar. Moreover, he devotes time to the community as a volunteer at several organizations in Delaware, a mentor to high school or college students, and a math tutor to students at all grade levels. Dr. Pettiford resides in Newcastle, Delaware. Join me as you put your hands together and invite forward Dr. Pettiford.
Thank you. I know everybody's had a very long day, but I'm here to kind of talk about small business and financing, and also building credit. So how many of you out there actually own a business? Does anyone want to actually own a business? Okay. What are some of the challenges that you have with your business right now? Financing. Okay. Is anyone out there looking to start a business? Thinking of starting a business? Okay. So the first thing that you have to do when you think about starting a business is really kind of take a look at yourself in terms of what is it that you want to do. Is it going to be a product? Is it going to be a service? Okay, so you're basically doing a self-inventory to really understand exactly what you want to do. Okay, you also have to look within yourself to say, am I willing to take risks? Okay, because anytime you start a small business, it is going to be a risk. Okay, now I work at JP Morgan Chase, where we do quite a few small business loans. And that's the first question that we ask people when they submit their application for any type of funding or anything like that is, are you willing to take the risk? Okay, whether it's part-time initially, or whether sometimes you have people that would actually leave their full-time jobs and actually start a business. But in any case, you have to understand that there is some risk involved. But if you put in the time and effort, you can also benefit from the rewards as well. Okay, so that's the first step whenever you're thinking about starting a business. Okay. Second is your idea. Okay, what is your idea? What are you planning to do? Are you looking to, again, is it a specific product that you want to develop, something new or innovative that you actually want to provide in the marketplace that you think is going to add some value? Is it a service? I just provided some consultation to a gentleman who actually started his own laboratory where you do blood work. Okay? And he understood that there were risks and everything associated with it because there are major players in that space. Okay? But that's something that he wanted to do, and he felt that there was a market that could use some of those services. So those are the types of things that you have to think about is, what is your idea? Is it something that you think is going to add value to the community? The third thing is you actually can test that idea. Okay? So when it comes to testing, that's when you kind of solicit people and have certain conversations. In some cases, you may want a focus group, something like that to really make sure that what you're planning to offer is going to resonate with the community. So if you're a contractor and you know that there's many contractors out there, what is it that's going to set you apart from the others in that same space? So if you want to be an electrician, start your own electrical business, what other electricians are out there? Okay? Is the community looking for that type of service? So you need to kind of ask those questions and get that information. You can also look at different resources like the Small Business Administration Office, where they have certain surveys and results that may be able to give you a clue in terms of some best practices of the industry or the area or the market or the product that you should move into. The most critical step, once you've kind of gone through the self-inventory, once you've kind of gone through your idea, you kind of feel, okay, yes, this is something that I really, really want to do. Now, you have to develop a business plan. Now, whenever people come to us for financing or funding, you would be amazed at how many people have not done a business plan. Okay? That business plan is going to help walk you from A to Z on actually starting your business. It's going to talk about not only your idea, but what is your funding. It's going to talk about how are you going to market your business. You're going to name your business. Is that a name that's going to resonate? Are you going to have to be licensed? Is it going to be a self-proprietorship, or is it going to be a partnership, or is it going to be a corporation? It's going to walk you through all of those steps. And I always tell people, once you kind of get your idea, you kind of know what you want to do, set up a business plan. There are several resources out there that will kind of walk you through every step of a business plan. It can be as small as, say, 10 pages. It could be as many as, say, 40 or 50 pages, depending on how detailed your business is. I spoke to a gentleman who opened up a liquor store in Baltimore, Maryland, where I'm originally from. And he had some concerns because of the level of competition that he knew would be there. So what he had to do was really walk through step by step everything that he was looking to do. And when he got to a certain point about competition, he realized how flooded that area is, and and therefore that may not be a viable location for the type of business that he wants. So therefore, he actually kind of pulled out, and then he ended up moving into a different location in Maryland that was able to give him the benefits that he was looking for. Okay, so that's one of the things that the business plan is going to do, is it's really going to test you and test your understanding in terms of where you want to go. It's going to allow you to think about your finances, what are you projecting to spend or make in the next 3-5 years. So those are the things that are very critical. So I always tell people, make sure once you kind of formulate your idea, and you're ready to go through a business plan from start to finish. And then you'll be able to get more information and more insight in terms of, is it something that you're willing to do? Okay. As a part of that is identifying your market. Okay. Identifying your market. You don't want to offer a product to an area that you know is not going to require or need that product. Okay. There's certain things that you would not, there's certain businesses you would not open in New York City compared to Atlanta, Georgia, or Wilmington, Delaware, compared to Middletown, Delaware. Okay? So those are the types of things you have to think about. Think about the market that you're in and where you want to be in. Okay? Think about the consumers that are going to take your product or service. Are they in that area? Is that a demand for them? Is that something that's going to be of value to them? Okay? If you look at Route 13, we're flooded with car dealers. Okay? So if you're thinking about starting a car dealership on that strip, again, does that actually make sense? Does that add value? Is there going to be some demand there? Or is your supply so much more than your demand, you're not going to actually get any value from it as a business owner? Okay, so those are some things to really focus on as well. Any questions so far on anything? Okay. The next, yes.
For an individual who wants to go into business but has never, there's something I'm hearing which is
very, very encouraging, is that what steps needs to be taken before you go into business, knowing what you want to do, whether you want to provide service or you want to,
you done?
product.
They can't eat, they're still on duty.
Which, you know, I thank you very much for bringing that to on the floor now. I'm interested in going into business, but I've been working for myself for years without having an office, you know, and I have not really decided. I mean, no, I thought of going into products, which I have not decided which product do I want to go into. The service that I'm engaged in, which I've been doing for several years, it's not going to be an easy thing for me to set it up. I work in New York City. You know, renting a space is kind of expensive. Yeah. And I would just like for you to kind of enlighten someone like me who would like to, you know, go into business, what I need to know before going from finance.
Okay. So again, some of the other steps that I was talking about in terms of the idea and the business plan and things of that nature, definitely. But one of the critical things is you say you kind of are, you're kind of like an individual business right now. You're trying to think about your product or service, and specifically the product. Again, that's where you really need to start doing research in terms of, okay, first of all, what product do I want to sell? What product do I what product do you want to offer? Okay, and then think about specifics in terms of how am I going to, like if it's a product, how am I going to make this product, right? How much am I looking to sell this product for? Who am I looking to sell this product to? You keep asking the who, what, where, when, why, and how type questions about your product. Once you kind of formulate an idea, and then you basically kind of write it down and draw it out, or however you want to actually put it in writing, then you start to do research and determine, is that an actual product that can add value? Let me give you an example. I'll give you two examples, actually. I had one friend who wanted to do a product. And he's seen all these things, and I know you've seen it as seen on TV, right? You see it on, you know, it's in stores, it's on TV, things like that. So he was thinking, wow, if I can kind of create a product and just put it out there to 100, 200, 300,000 people at 1995 and I get a cut of that money, I'm going to make some money, okay? So what we did was we had to kind of scale back and say, okay, that's pie in the sky. What is it that you really want to do, okay? It was interesting because his family was a family of chefs. And one of the issues that they had was the speed in which they would cook pasta for certain dishes. So he ended up thinking of an invention called the pasta pot, which was it was probably maybe at least 10 years or so ago. It was an actual pot that you could boil water, but the top was locked, and it had holes in it that you could actually pour the water out. And that drainage process made it a little bit quicker for them to cook pasta and be able to move on to completing a lot of the dishes. So once he kind of thought about that, he actually talked to different restaurant owners about that. He tested it and said, that's my idea. Then he went through the process with that idea in terms of getting a patent, making sure you figure out who's going to actually make the product, how you're going to sell it, how you're going to market it, and so forth and so on. So again, that's a critical piece in terms of those steps to make sure that what you want to do and what you want to offer is going to resonate with a population. I don't know if a lot of people have heard of Under Armour. Well, one of my friends from Maryland, his relative is one of the starters of Under Armour. And that was one of the things that he was saying was, there's Nike, there's Adidas, there's Reebok, there's all these different sports apparel manufacturers out there. But the challenge that he was having while he was playing football in college was the cold and dealing with cold weather and trying to develop a product that's going to add value in cold weather, but may not be as expensive. And so with doing some research, talking to some textile industry, talking to marketing and finance, he went through that process, and over time he ended up creating this business. And now this business is multinational. You have now contracts with specific colleges, universities, organizations. So again, just a small idea can add value, but it takes steps to get to that level. A lot of, like I said, a lot of self-inventory, a lot of questions, following a business plan, stepping those steps, and then making sure that once you've gone through that, you then will either get the green light that says, yes, this makes sense, I can keep moving, or no, maybe I need to think about it some more, okay? The next piece of that is really talking about financing, okay? Who is going to finance your business that you want to start, okay? Is it going to be yourself, okay? So the previous speaker was talking about borrowing from your 401k. Okay? I've seen people who have actually borrowed from their 401k to start a business or to make a product. Okay? I've seen some that have worked and they've made a good amount of money and they've been able to be employers and employ people. I've also seen people who did not follow the right process and ended up losing a lot of that money. Okay? So again, you just have to be smart and go through the plan to determine, okay, am I going to self-fund this? If so, how? Am I going to take it from savings? Am I going to take it from investments? Because I know if I take it from my 401k, there's a risk there. I know if I take it from other investments, it's a risk there. I'm losing money if I now take it to do something else with it. So those are the things you have to kind of make sure. And when, like I said, when you go through the business plan, it takes you step by step in terms of what are your expenses going to be, what potential revenue you expect to come in, what potential profit you think you're going to make first year, second year, third year, etc. Now, a lot of times you may hear that people say, yes, in the first year of a small business, you don't make money. In many cases, that is true. Okay, that's one of the risks, is that if it's something that's small, has become reasonably at a certain level, sometimes you may not make money in the first year, right? However, if you plan appropriately and make sure you adjust all the little details, then you can minimize some of that risk. That's where the financing comes in. To determine, again, am I going to finance it? Am I going to go to a bank and maybe get financing? Am I going to actually seek out investors? Okay? That's where a lot of research comes in, because there's many investors out there, venture capitalists and things like that, that's what they do. They look for opportunities to invest in something that they feel they're going to get a better return for as opposed to investing. Okay? How many have seen the TV show Shark Tank? Okay? Common example, right? That's what they do. They have a lot of money. But the thing that they're not going to do is invest in something they don't think is going to have the value. So one of the first questions that they asked is, what do you value in your company? What is the value of your company? Based on the knowledge and experience that they have, they will know right away, is the number you're giving them correct and accurate, or is it just some pie in the sky number? Okay? That's why you have to have all your I's dotted and T's crossed in terms of understanding, again, financing. Where are you going to get this money from? How are you going to support this business financially? Are you going to have employees? If so, you now have to take that into account. Is it a business where it requires inventory? Does it require equipment? All those things are part of that plan that you have to account for in your financing so that you get to a set number that you know you're going to need from the beginning. And once you have that number, then you kind of figure out, okay, where am I going to finance it from? Okay, so that's where you kind of think about yourself. You can ask family members, which I normally don't recommend because there could be some issues if things fall south, but depending on your family relationship. But again, you have investors out there that are willing to do that. Okay, so you also have to be very, very smart in regards to that as well. But there's numerous ways to finance it. But again, you just have to make sure that you have all of your facts and figures in the right place. Also think about a budget. Okay, so part of that financing is the budget from start to finish. Whether it's the phone, the computers you're going to use, if you're going to have an actual location, what's the cost to either lease or rent that location? All those different things come into play. Or you're going to rent your house, right? Those types of things you have to kind of think about, and you have to budget accordingly. Okay, and again, you don't have to do it all by yourself. There are resources out there that will be able to help you in terms of really seeing what that budget may be. Is there something that you could be missing that you may not have thought about? Okay, because at the end of the day, you want to leverage as much as you possibly can to make sure that you have a complete understanding in terms of what you actually want to do from a financial perspective. Okay, which kind of leads me to the next point, which is credit. Okay, credit is extremely important, especially if you're looking for a bank that can provide that financing. Keep in mind, if you're a small business owner, you're looking to start a small business, okay, they're going to look at your you need to make sure which is what we consider like less than private score. Okay. Banks are looking at not only that score, how well are you paying bills? Are they paid on time? Do you have too much debt compared to your income? They're going to look at how much you're looking to start that business and compare that to what additional money you may have to start that business. So they're going to look at quite a few pieces of financial information to determine if you're going to be, if they're willing to lend you a certain amount of money for your individual business. Okay? So that starts with your actual personal credit and your personal finances, because you need to demonstrate to the banks that if you can manage your own finances well, that you should be able to translate that to a business. Okay? If it's not, if they don't see that, then they're going to pull back a little bit in terms of possibly lending you money, or maybe not lend you as much as you may ask for. Okay, so the first thing is to make sure you have your credit report. You can get a free credit report every year. Okay, with annual credit report, annualcreditreport.com. You get a free credit report for all 3 credit bureaus. Okay, now I say 3 credit bureaus because a lot of people don't realize that we do have 3 basic credit bureaus: Equifax, TransUnion, and Experian. And in some cases, your information may be different for each one. The reason why is because different banks use different credit unions depending on where they're located in the country. Okay? So what you want to do is you want to make sure that, first and foremost, you understand what your score is and understand what's on your credit bureau, so in that way, you can make sure that no matter which credit bureau that bank may use, everything lines up. Every mortgage you have out there, every car payment, credit card, student loan, you name it, whatever's on one should be on all of them. If it's not, then you can dispute, or you can dispute some of those or challenge some of those and try to get some of that corrected. Okay? But at the end of the day, that's one of the first pieces that a bank is going to look for. And then, like I said, they're going to start looking at personal finances as well. So those are some key things from a financing perspective that if you look at the person first. Once your business has been established, then they'll be able to look at the financials and the performance of the business. Okay, but their initial thought is they want to look at you as an individual, because since you're the one that's going to be owning or part owning that business, they want to make sure that if you're handling your finances well, you should be able to translate that to the business also. Okay, the other thing is support. A lot of people don't think about this, but support. And when I say support, I'm not talking about financial support, I'm talking about personal support. Because again, when you talk about starting a small business, it's not going to be just like that. It's going to take time. So if you have family, friends, wives, children, sometimes you may have to spend a little bit more time to help develop your business if you want it to be as successful as you're expecting it to be. So therefore, you're going to have those conversations and get that support. Okay, because that's critical, because it's hard for you to try to start a business and really push forward with starting this business if you don't have a lot of support behind you. Okay, so I always tell people that's also another important part, to really have those conversations so that, you know, if you have to stay up late, or you have to do certain things on the weekend, or whatever the case may be, and people understand the level of effort that you have to take in order to fulfill whatever vision you may have for your business. Okay. Also understand the legal part of the business. Again, I kind of referenced it earlier in terms of, is it a self-proprietorship? Is it a partnership? Will it be a limited liability corporation or LLC? Is it going to be an actual full corporation? There's different benefits for each one. I don't really have enough time to really kind of go through the details, but I can give you that information. Each one has different positives and negatives. So you need to really understand what's the difference between a sole proprietorship versus a LLC, or an LLC versus an actual corporation. What tax benefits are there, things like that. So that whole legal part of it, you need to really want to understand in terms of how you want to set up your business as well. I also talk to people in terms of resourcing. Again, there's the Small Business Administration, that's a huge resource. You can also actually talk to individual business owners, and that's where a lot of people get their information from. They get their information from actually talking to small business owners and really getting them to kind of give them some of the unknowns that you may not be thinking about in your business. Okay? You can talk to different colleges and organizations. Colleges and universities will always have instructors that will be more than happy to kind of help you as well. I'm actually an instructor at Wilmington University, and I teach a variety of business courses, including small business management and small business finance. And I've had a lot of students who have contacted family, friends, and so forth, who just emailed me and just asked me basic questions. And you'd be surprised at how many professors at universities will help you as well. But like I said, a lot of times, just talking to a lot of the small business owners, you get a good amount of information as well. Make sure you understand a lot of the tax obligations. Make sure whether you need permits or licensing. Those things as well as a part of the journey in terms of being a small business. And insurance, that's one of the other things. The last thing I would want to talk about really is patience. Okay. Please understand that starting a small business is not something that's going to happen overnight. It's not going to happen within a year. It's going to take some time for that small business to grow. So you have to have patience. Okay? I've seen people that after, say, 6 months, they just gave up. Okay? But then someone else was in the same track, and then they ended up flourishing and you ended up falling back because you didn't want to continue the effort. Okay, it's not something that's going to be overnight. It's going to take some time. So I tell people to also be patient. Take some time. Make sure you monitor everything that's happening. Okay, and again, don't try to push yourself or your business or your product too far. Let it grow naturally. Okay, a lot of people they get a little bit of business. Like I had one gentleman, he had a product and he sold like 10,000 of them, and then all of a sudden he went right on ahead and through his manufacturer he made 500,000 of them. Thinking, oh, if I made 10,000 in these 3 weeks, I know I'm going to make this much. So he ended up making 500,000 with product, and then it ended up only selling about like maybe 60 or 70,000 of them in a short period of time. So he ended up with all this inventory and all this extra expense because he pushed the gun a little bit too hard compared to if he had just taken his time and seen like a natural trend. And then talk to people and really understood how these things kind of work, because every product, if you may or may not know, every product has a life cycle. Okay, that life cycle goes through beginning, through maturity, then it'll peak, and then something mature, and then come down. Okay, if you think of any product out there that's normally happened outside of Air Jordans, there's not too many other products that have sustained themselves for long periods of time. They only have a certain life cycle. So those are things you have to understand before you try to push the gun and move forward faster than you may actually do. I've seen one gentleman, he opened up one business, it did well after 1 year, he decided to open up another one that quick. So all the money that he made, he then turned it back and opened up another business without letting the first one get to a good maturity level where he was able to build enough capital that even if he started put it in another location, he would still be able to have additional funds in case he needed them. Okay, so he ended up reinvesting all of his funds into a